I'm still reeling from some comments we got from Bob Prince of Bridgewater 30 minutes ago, who said that the boom-bust cycle as we know it is done. It's over. What do you say back to that?
You'd have to kill fear and greed, I think, for that to be true.
Do you think we have done?
No, I don't. I think, listen, there's a reason we've had cycles going back thousands of years, and I don't think that stops. We happen to be in a very benign period with relatively global stability and, relatively strong economic growth around the world. Not spectacular, obviously. Europe's slower than the US. But, for, geopolitically, this isn't a bad decade. But, no, I think... I don't think the cycles are done.
I want to get to the nuts and bolts of your bank, your operations, your strategy in a moment. I also want your view on the Federal Reserve too. The balance sheet expansion. Is it QE or is it not QE? That debate is raging on Wall Street at the moment. What is James Gorman's call on that? What is it?
Well, the Fed only has two real tools that they're working with at the moment, and they've pretty much exhausted the rates. So that's the reality. So they've only got the balance sheet that they're working with, and it is a form of QE. I mean, it has been subsidising prices. It's been helping the markets along, and they've done it for good reason. I mean, when they raised rates, 12, 14 months ago, the markets took a scare. So I think the Fed is just bringing things back in line.
What are the implications of that at the moment if the Fed keeps saying it's not QE, but many people, including yourself, believe it is? Neil Kashkari, the Minneapolis Fed, is getting his head around it. He doesn't understand why people are calling it QE. You're taking a risk-free asset reserves and transferring it for another risk-free asset, T-bills. No duration involved, no risk involved. How is it QE? That's what Neil Kashkari's asking.
The Fed's providing liquidity to the market, right? They're providing an underpinning to say, we're here. That's basically the message. It's a message of confidence as much as it is of activity.
I want to move to the triumph, which is Morgan Stanley, of the X number of years under your tenure in wealth management, the margins you've received, your statements the other day of improving margins as well. Everybody in this valley wants to be James Gorman. Everybody I know wants to get into wealth management. They want to catch up with what you saw X number of years ago. Do you worry that we will compete away the profits in the business, that if everybody gets in, like wheat farmers in Kansas is a state, James, in the middle of the nation, if we
I think James is familiar with
He's familiar with Kansas, okay.
You're a citizen since 2004,
James,
Tom.
Okay, well...
By the way, I've got siblings who don't want to be me, so I know everybody in this valley.
But if everybody wants to get into wealth management, is there a risk that you compete away the margins and the Morgan Stanley margins come down, down, down?
Yeah, there's a difference between wanting to do it and being able to do it, and being able to do it cost effectively. Scale matters in wealth management. We made that call, and thank you, we made that call 10 years ago. There are some monster players in wealth management, whether it's on the direct side with what Schwab and Ameritrade have now done, what Fidelity has done, obviously, and what the big full-service firms like ours have done. It's very hard to replicate that. I mean, to be a wannabe in this space is a very expensive proposition.
So then how does scale go? How does the great Gorman roll-up go in the industry? What do you need to acquire? If they want to be a wannabe, they go, we want to be Gorman, and you go, you're a wannabe, we're going to take you in for value for all.
Yeah.
When does that process begin, that roll-up?
There are very few assets out there that you can buy. And if you're buying them from a small base, where are you going to get the scale synergies from it? So it's really the players like us who can keep consolidating. I think, again, for entrance into this space, extremely expensive. I wouldn't recommend it.
It's easy for us to sit here now and say, congratulations, James, great call. This was the right call. It was obvious. But 10 years ago, it wasn't. You made that call to scale up wealth management, pull back from fixed income trading as well. 10 years later, to Tom's point, do you need a new play? Does there need to be a change in strategy after you've done that for 10 years, had the success? Or do you see the setup as it stands as having some real durability for another decade?
Yeah, it's a good question, and something you're constantly got to challenge yourself. Just because you've done and it's worked doesn't mean it's going to work in the future. You know, somebody asked me this question on TV a couple of years ago, and I said, what about we make some money? That's a strategy. That's when we're a sub 10% ROE. Now, the firm is operating 11% ROE, 13% ROTCE. These are good numbers. These are very solid numbers, record earnings. But no, I'm constantly looking for ways to grow, particularly wealth and asset management, without shrinking the investment bank. Our investment bank is phenomenal. Equity sales and trading, #1 business in the world. Our M&A business, ECM, phenomenal businesses. But there's not obvious ways in which you'd acquire and grow in that space. Wealth and asset management, different category.
Let's take ROE, raise the target.
Yeah.
gave a massive lift to the stock last week.
Yeah.
Still some questions on how you achieve it.
Yeah.
How do you go about getting that target?
We had questions when our wealth management margins were 6% on whether we could get to 15.
Yeah.
And they're 28. So, it's...
How did you affect that game shift, though?
It's a whole bunch of things, from restructuring the field operations to bringing more product that clients wanted to use, to providing more asset-based pricing, professionalizing the organization, then obviously buying Smith Barney.
Let's go McKinsey, and when in hindsight that looks brilliant. Let's go all McKinsey right now on you. The strategy is the following, and one of them is do nothing. Morgan Stanley, acquire banking. Morgan Stanley, build banking. There's a small firm, Goldman. They're trying to do that. Mm-hmm. And then the other thing is do nothing and stay focused. Which of those three is the Gorman way?
I'm going to give you an unsatisfactory answer, but you can't. You have to look at what the returns would be in the strategy. Obviously, if you could acquire a bank, we already have $150 billion of deposits. We're the 10th largest bank, I think, or 11th in the country. If you could acquire a bank at the right price, under the right...
Are those valuations out there right now? Can you go out to a regional or super regional?
But then you've got to ask it for a specific institution. What does it really bring you? So merely acquiring a bank, there are in the US, there are 4,000 banks. So you've got to have something that brings real scale to the institution. Doing that has to be, with the right kind of economic returns versus building it yourself. Currently, Tom, what we're doing is number B on that list. We're building it ourselves. And we're building the online presence in banking. We've got, as I said, 150 billion in deposits. We've got a huge mortgage book because our clients want to deal with Morgan Stanley.
What is your distinction versus Mr. Solomon's plan at Goldman Sachs in terms of building an online presence?
Well, I don't really want to comment on Goldman. That wouldn't.
I want you to tell me the distinction of the Gorman way versus what others are doing.
Yeah. I just imagine Mr. Solomon won't be commenting on Mr. Gorman.
But we'll ask
tomorrow,
anyways because we are Bloomberg Rude. Continue.
Well, now that we've set the parameters, listen, but I won't comment on Goldman's strategy, obviously, but we're building both core capability through our financial advisors. So when you open a financial advisory relationship, why wouldn't you want your banking assets in that relationship? So if you're borrowing on margin, maybe the better decision is to take out a home equity line of credit. That's a banking product. So it's mingling of that to make it easier for the client. At the same time, we are building our digital capability to go online banking, which I guess is what some of our competitors...
Where there are doubts, though, and we won't name names, let's talk about your own strategy, is whether you can build this out, get scale organically. You think we can?
Yeah. Well, we have. We've got, and look at the Solium deal we did. We've got 6 million clients between wealth management, the asset management, and then the ShareWorks program and Solium. We've got enormous scale as an organization. What we need is more product coming through it. That's really what we need and what our clients are calling for.
What you just described as a future for American finance, how does it differ from the superstore concept that went down in flames decades ago?
Yeah, that's a very good question. I think you've got to be very careful about building too much complexity into these institutions. Number two, you've got to have management that are used to running and capable of running not just products, but running organizations. And historically, our industry didn't have professionalized management. They had professionalized super producers.
Yep.
So if you're going to have complexity, you better have management that a GE or an IBM or one of the great American companies would have, a Microsoft, that kind of capability. So we're investing as much time, Tom, on building management capability as we are around business
Is there
strategy.
room? What's the new super producer look like? To go retail, John, the super producers, how do you build new super producers, which are the lifeline of that huge revenue, into the bigger profit?
You give them teams. Our best teams under our top producers have as many as 15, 20, 30 people working on them. Because how can I be the industry expert on foreign exchange, municipal bonds, growth stocks?
Oh, that's our act, James.
Right?
That's our act.
You guys can do this.
We can pretend sometimes.
I'm more modest. I can't do this, and our producers...
They're in our ear.
Unique capability around you, right? When you go to see a specialist, you see specialists. There are groups of people who've got capabilities that make up the full medical needs that we're all going to have. So I'm all about building out expertise in a collaborative, team-based approach.
Optimize headcount. 1,500 jobs went year end.
Yeah.
Why, James?
We were setting the table for the coming year, and we've been cautious. That's sort of our strategy. We're disciplined and cautious. And to be perfectly honest, we had very little attrition. The last couple of years, we've had almost no attrition. Nobody's leaving. And we got to the end of the year and we said, well, does this really add up? And we're about to promote 130. We just promoted 130 new managing directors. You've got to create capacity for these folks.
Speaking of promotions, number 2 at the bank. Who's it going to be?
Who's going to be our number 2?
Yeah.
Well, if I told you that, I'd have to kill you, John.
When are we going to get a result?
We're getting along way too well.
No, we thought that this morning.
We've got 1 minute left. I just wanted to make some news. When are we going to find out?
We'll eventually name a president or presidents, and you know, I'm committed, and I think you guys have reported, and others have reported. We've got a tremendous team of folks who are in their late 40s, early 50s.
Our David Weston is relaunching Wall Street Week. Part of what you do, part of what you do, is to bring the fabric of what Lou Rukeyser did years ago back. Can we make investment fun again like Lou did years ago? How did the nation do that?
He made it a conversation rather than a series of, you know, he took people away from what the daily movement in the prices were, and he made the conversation around thematics, around personalities, around larger trends, and that made it much more interesting. I think just seeing the endless you know, series of numbers getting thrown at you, the public, they numb over.
Sounds like the surveillance manifesto.